All right, what's going on? Welcome back to the channel. In this video, I am going to be breaking down some pitfalls that you're probably having on why you're getting denied for credit cards funding, whether you are on the business side or on the personal consumer side. I promise you, if you pay attention to what I'm about to share with you in this video, it can make or break the amount of funding that you get, the type of credit cards that you get approved for, and the rates in which you get approved for. So let's go ahead and get right into the content today. Check this out. When it comes to credit card approvals, over 72% of approvals or credit card applications are automatically denied like this simply because information does not match what the credit bureaus have on their side, what secondary bureaus have, and what the credit card companies pull. Here's what this means, and here's what you definitely want to pay attention to even before we get to the rest of the material. When you are applying for credit cards, you want to, again, make sure that you know what's on your credit report. This means names have to match up. Addresses have to match up. So it's not going to help you out if, let's say, you have a junior attached to the end of your name, but you're applying for a bunch of credit cards, or you're applying for funding, or you're applying for loans with different lenders, credit unions, or banks. This is all going to apply the same if you, let's say, don't use the junior at the end of your name, or if maybe your license is registered in one state, in one county, let's say in one address, and everywhere else it reads that you live, let's say, in a previous address, or maybe the address that a bank has on file is different from, let's say, LexisNexis and what LexisNexis has on file. This is going to be huge, and this is going to be a key, especially as we start to tie everything else in, because when you update your information with the credit unions, with the banks, and with the credit bureaus, and when your report is nice and squeaky clean, it's going to make everything else on the back end a heck of a lot easier. The second thing that you want to pay attention to is don't just apply for credit cards, or don't just join banks and credit unions because it's the hot stuff, right? And because everyone else is doing it. I see this a lot, especially on different platforms. I get it. You want to try to maximize the amount of funding that you get. I get it. You want to try to get to the bag as fast as possible. But my word of advice and what I would give you, really a suggestion, right? Because I don't really know your situation, but my suggestion, which is usually what I tell my clients inside of my education company, the Inside Inner Circle, when I'm showing them different strategies that they can use to fund their businesses, is use credit unions and use the banks that are going to help you and your business grow, that are going to help you reach your financial goals, with whether you are going for 0% interest funding for 12 to 24 months, however you wanted to structure that, or if maybe you want to get a lower limit loan, but you know that the terms are going to be more favorable for you and your business, or in some instances, and this is even bigger with credit unions, certain credit unions, depending on the demographic and depending on the location where you live, so you have to be within a certain, let's say, mile radius, you have to live within a certain district, you have to do a certain type of work. This is going to vary. So you're going to have to do your research to see which credit unions offer this for you, but I'm giving you this so that you can kind of take it and run with it. So hopefully you're picking up what I'm putting down. They are going to work with specific industries and certain individuals that are within, again, their area, because credit unions are governed, or really they're operated by members, while bigger banks, the regional banks, your Chases, your Bank of Americas, your Wells Fargo, they're ran more by the shareholders and more of a board that doesn't necessarily cater to the smaller mom and pop type of business, or those credit profiles that aren't necessarily as clean. And so don't just go with what's hot, go with what you know is going to benefit you. This is why relationship banking is huge, because the same way that you don't just get into a relationship with someone because, you know, you guys have a couple of things in common, whether on a personal level or on a business level, you want to make sure that it's actually going to be a good blend if you guys do decide to partner together, which is why the type of credit union that you pick and the bank that you decide to do business with is going to be big. Now, the next piece that you really want to pay attention to, and this can make or break not only whether you get approved or not, but it can also make and break how much funding you get. This can mean the difference between 5K, 50K, or 100K, is going to be the amount that you put on your application. Now, I'm not telling you to lie on your application. If, let's say, you're making $45,000 a year, don't go out putting $250,000, $300,000, because it could cause you to get a manual underwrite. And if you can't back that up, and if you can't actually prove either bank statements, proof of income via tax returns, or even if you are going to go off of your pay stubs, then at that point you could just get blacklisted, which means that you are pretty much kicked out and banned from being able to do any type of service or business with that bank, and they're just not going to service you. And so the way that you want to work around this is there's really a few different angles that you can take. Let's go ahead and take one of them. One of the angles that you can take is going to be household income, specifically total household income. What does this mean? Let's say that myself, I live let's say with a significant other. I'm married, which I am. So I'll give myself as an example. Let's say that I am making $100,000 a year for the purpose of the video. I'm making $100,000 a year. My wife is bringing in another $65,000. I can go ahead and merge both those incomes together on my application, and now I can put 165. And so I want you to think kind of like outside the box. Do you live with a relative, whether a spouse or a significant other? Doesn't necessarily have to be someone that you're married to. Maybe it's a sibling, maybe it's a parent, maybe it's an adult child that maybe you want to help them out to help increase their credit limits, right? Or maybe you're bringing in a partner in your business. Can you merge that income together and put that on the application? The answer to that is yes. Obviously, you want to get the consent of the other person. That way, if there is a manual underwrite, you guys can bring both your tax returns, or let's say both of your proof of incomes together. But let's go ahead and take it a step further. Let's say if we are in business and your business happens to hold assets, or maybe you have a stock portfolio and you happen to hold maybe $40,000, $50,000, $60,000 worth of stocks, and you're getting paid out dividends. Guess what? You can use the dividends as income. You can use the royalties as income. You can go ahead and use the rental portfolio as income. Again, whether it's on the business's name or if it's under your personal name, this is going to help increase the amount that the bank sees. What this does for the algorithms on the back end is that it's going to increase really the odds of two things. Number one, it's going to increase approval odds because your debt to income ratio now goes lower because your income is now seen as significantly higher than your debt, and then your payment to income ratio, your PTI, is also going to kind of shift in your favor because now your income is also seen higher than your payment. So let's say if you already have car payments, if you already have a mortgage, the 100K was maybe fine, but now that you're maybe at 200K, including real estate, including stocks, including a retirement account, whatever that is that you're getting paid through is going to work in your favor. And it's also going to help you in the event if there is a manual underwrite, which there's nothing wrong with a manual underwrite, especially if you're going through a credit union. But the whole purpose of this video is to try to get you automatic approvals. Now, the next big no-no that can cause you to get an automatic denial is if on your application you're putting that you are either self-employed or if you are retired. Now, there is a workaround that I'm going to show you right now. The workaround with this is that if you are self-employed, because I know that a lot of entrepreneurs watch this channel, and I know that we're always talking about business credit and business funding, so pay attention to this next part. If you are self-employed, you don't want to put on the application self-employed, right? You want to put that you are employed and that you are receiving income, hence you're self-employed, but the way that you want to put on the application is the business name, right? Don't just put your name, put your business's name. So if it's through a corp, if it's through an LLC, use the business's name to do the majority of the heavy lifting. That way, when a bank sees it, it's seen as less of a risk. The reason why banks tend to flag and they tend to audit and they tend to just give you automatic denials if you put self-employed is because more often than not, self-employed accounts, again, more often than not bashing anyone, but more often than not, self-employed accounts are seen as a higher risk. The majority of these people don't have business bank accounts actually set up, and they just don't have enough income coming in to actually prove that their business is sustainable. Hence why we have over 95% of small businesses fail within their first year and a half, 2 years. So my word, again, a suggestion would be for you to include the business's name that you are working through. If you are retired, this is going to be a little bit tighter because, again, they don't necessarily want to see on a file that you're retired because this is seen as fixed income. So if you can have at least an LLC or some type of business set up, place that on the application. Again, without lying, you want to make sure that this stuff is actually legitimate, it's actually put into place. You have your EIN, you have your LLC, you have your articles of organization, so that you can leverage that information to your advantage. Now, before I give you this last one, if you've been finding value in this content, consider hitting the subscribe button down below. join the official community, and don't forget to hit that like button because it does help this content reach a larger audience. Do not, I can't stress this out enough, and I left this part for last because I think it may be the most important piece to all of this. Do not give banks and do not give lenders, do not give underwriters more information than what they need. Think of it as like you're going into a court of law where anything that you say can and will be held against you. It's the same thing in the banking world. It's the same thing in the lending world. You don't just want to give banks all of your information when it comes to the line of work that you do, especially when you know that the line of work that you do could be seen as a higher risk. And so you want to give as bare minimal information as possible, because any information that you do give them could either spark an automatic denial, or in some other cases could cause them to, again, pique even more questions. This means more paperwork. This means more questions. This means a longer approval process. The whole point of this video is to make sure that, like my clients in the Inside Inner Circle, I give you guys the tools that you need so that you can maximize the funding that you get in pretty much in a faster sense, right? This is all about speed. And so when you are filling out your application, you don't want to use words like trucking. If you're in the trucking space, you don't want to use words like stock trader, stockbroker. You don't want to use words like credit repair. You don't want to use words like financial analyst, even real estate investor or developer, because we know that those are pretty popular. You don't want to use anything that's high risk, because that's going to, again, get flagged on the back end, because those industries are known for getting audited, known for being cash intensive, and known for being a bit more likely to get sued. And so banks are really watchful of who they lend to. So instead, you want to watch the language, and you want to swap it out for things like enterprise. You want to swap it out for things like management. You want to swap it out for things like consulting services. You want to swap it out for maybe even marketing services, right? That language right there is seen as less risk to the lender, which is then going to make your file more appealing, and it's going to help you become more fundable, more fundable. And so if you found value in this content, and if you actually use what I provided you in this video, I promise you're going to thank me later, and it's going to increase your approval odds. Consider hitting the subscribe button down below if you enjoyed this video. Don't forget to hit that like button, because again, it helps this content reach a larger audience. Anytime I'm not posting on here, I'm posting over on the Inside with Irv show, which is my podcast style channel. So if you like what we have going on over here, you'll love what we have going on over there. Once again, I appreciate you guys checking me out. Till next time, everyone, I will see you in the next video.